Hi everyone, quick session on tax. So this is for the exam, really. Okay, right, there's two sorts of tax which we will consider. There is income and there's capital gains. When are we interested in these? We're interested in these on when we value assets. Which assets do we concentrate? Which we concentrated on the course, which we're going to think about here. Three sorts really, where these are applicable. So we're going to say bonds, we're going to say equities, and we're going to say property. So for the exam, if tax is to be considered, it will be, tidy that up, be specified. Right, okay, nice straight line there. Right, income, so income tax. Applied to the income from an asset. So for bonds, it could be coupons. For equities, it's dividends. And then for property, it can be rental income. It's expressed as a rate, say T1. Oh, dear. Oh, what's happened there? Oh my goodness. Oh, these buttons just. Oh my goodness. Oh God. So rate T. Are these buttons working again now? I'll turn them off. But rate T. So we can have a applied at a rate T1, say. So if we're looking at coupons, it can be the coupon rate multiplied by 1 minus T1 will give us the net coupon received. Okay, that's income tax. Now, capital gains. So this is payable on a gain at sale of the asset. So only payable when there is a gain. So the formula, sale price minus purchase price. There's a comma. Zero. So we'll put that round there like that. We'll say this is like a max function as we learn in an Excel, or a higher function. So if sale price minus purchase price is negative, then we use 0 instead, and then we multiply that by, say, the T2, which I've just said is the capital gains tax rate there. And that'll give you the amount of tax payable there, the capital gains there, the CG, the CGT, capital gains tax. So you can see that these things are different. So obviously the income tax is always applicable. When you get some income, you've got this tax rate, whereas capital gains tax is only payable when there is a gain. So you have to watch out for that. Some of the practice questions you'll be doing will apply a capital gains test before you include an allowance for capital gains, but you don't have to worry about that. So if you see capital gains, you know that there is going to be a gain applicable. The capital gains can be applied to anything. In real life, we know that if you've got a second property, your first property is exempt from capital gains, but your second property or from then on isn't. So if you bought it for 250,000, sold it for 500, you'd have a gain of 250,000 there, and there'll be some capital gains tax applicable, etc., etc. So it can be applied to any sort of asset. And yeah, for the exams, yeah, you need to be ready with both of these. These could easily come up in both. They will be specified. Not necessarily just on bonds. It could be anything really. As I said, it could be a property question. It could be an equities question. So do bear that in mind. I think really there's not much else I want to say at this moment in time on tax.